All right, welcome back to the show. We always talk about real estate on the show, but what about the financial side? She is the best advisor in the space. Sarah Goforth joins us in studio. What's up, Sarah Goforth?
Hi, how are you?
Welcome to the TV show.
I'm happy to be here.
Good to have you here. I already teased the audience that we're for the first time finally going to break into a rent versus own, which is like so overdue for a show that talks about real estate.
Wow, you just lost a lot of viewers.
No.
Spreadsheet time.
Wah, wah, wah. No, I'm telling you, it's exciting. I promise you this before we dive into it. It's great for you renters. It's also great for homeowners who want to know how interest rates move, payments and things like that. But how's the market? We hear from a lot of top producing realtors. It's better to hear from the finance people.
Pricing's really cheap.
Yeah,
So,
well, rate-wise.
Rate-wise, financing's inexpensive. Rates are moving up, the cost of housing and home values are going up. So if it's something people are interested in doing, it's a good idea to take a look at it now.
The rates kind of shot up a little bit.
They're higher, but in the whole perspective of time, I mean, we're still at ridiculously low, historically low.
Like in the fours?
Yeah, correct.
Okay, so we're in the fours, that's very low. What I think really illustrates that point is this. We're not going to bore people today, right?
I love spreadsheets. I find it quite exciting. But
I know, you're kind of the numbers gal for mortgage, and she aligns with a lot of great financial advisors, so if you really want to get something that's tailored to your short, long-term goals, Sarah really does a phenomenal job. This spreadsheet, it's very easy to understand. I've looked at plenty of these before, but I want you to kind of walk us through it. I imagine it'll roll on the screen for our viewers. What are we looking at? Give us kind of a nutshell what this means.
it basically compares buying a property versus renting it. So
Okay.
it compares what they're paying in rent compared to a possible purchase, how much money they're going to need for down payment or how much money they have, and what that equates to as far as the tax savings that's involved, and putting that money towards purchasing a house as an investment or putting it somewhere else in another investment to gain wealth. So it
what I
compares the
see,
two options.
I see a $2,500 a month rent payment.
Correct.
Just ballpark average in San Diego.
Yeah.
And you have a $500,000 purchase, right?
Correct.
So a $500,000 purchase. That still always sounds big, being from the Midwest. You did what interest rate? A 3.5, 3.625.
Yes, on this one.
So you have a principal and interest payment of $1,824, and then the total payment is $2,333. So that's already less than rent. And that's not even including the equity being paid into and the
Correct.
tax advantages.
Correct. And what it does is we put in their tax bracket information, so we know how much they're going to be paying in taxes and what portions of this is going to be tax deductible. And it shows the monthly tax benefit of buying versus renting and what that after-tax monthly payment means. So in this example, $2,373, that includes taxes and insurance on a property. That is a payment that you have to make, whether
Sure.
monthly or biannually. In comparison to their rental payment, their after-tax feeling of that payment is going to feel like it's under $2,000 a month.
Right, that's it, the top right of this. You have monthly tax benefit, $419 a month.
Yep.
So because of the interest on your mortgage being written off, you are going to get that back. Or you could adjust your pay stub.
You get a big tax refund at the end of the year, or like you said, you would adjust your withholdings to see that tax savings on a monthly basis. You don't want to give the government a loan for a year.
If
you want to adjust it.
If you want to see a rent versus own, if you are a renter, reach out to us online on craigsewing.com. There's a pop-up box. Go in there, put your name and your email, and just put what you're paying in rent, and we'll have Sarah generate this for you. We had a lot of people reach out for our CPA last week. If you're a renter, you should reach out for this. So craigsewing.com. All right, I want to move forward. A lot of people are trying to get financed, Fannie Mae, Freddie Mac Conventional, FHA. What happens when you don't qualify? I know you have some pathway to help people.
A pathway program is
Yeah.
what we call it. It's what we've been doing for years, actually. It's just helping those people that have been turned down for a mortgage. Usually they don't even know why, but helping them figure out what that reasoning is and then getting them to a spot where they can get qualification. Or for those that don't even think they qualify, thinking they have to pay down their credit
So
debt
is this an actual program for financing, or is this something that you've kind of designed as a bridging the gap?
Bridging the gap.
Okay.
Because we actually take the time to go through their financials and let them know if right now isn't a time for them to purchase, what we're missing. So if it's credit score, what we can do to help improve that credit score. We give them a plan set for moving forward,
Okay.
and a time frame on when they can reach that. So we help with savings goals, reducing debt, and credit.
So you develop this whole plan, you identify where the pain points are that kept them from qualifying. What do you typically see? What is the biggest reason that people don't qualify?
Usually, it's just because of either a small thing on their credit or just given the wrong information. I got to tell you, so many people have been turned down for financing, come into my office and want to talk to me about it, and we're able to put them into a very low interest rate loan right away.
Just because somebody didn't do their job right?
Just because someone didn't take the time to notice a couple of things in their finances to make it work.
Like a debt that could have been paid off, or
an error that could have been
on their credit report.
Exactly.
Interesting. We talked about that earlier in the show about how there's really no credit police. There's no one really looking out for your credit score. It's this number generated by the bureaus who are making billions of dollars, and they don't even get it right. So it seems like if you actually go through it with a fine-tooth comb, you can really help. Well,
Exactly.
Sarah Goforth, Pathway Program. If you don't qualify for one reason or another, don't give up. You can connect with her. If you are getting into the game, that wasn't
you can afford.
That wasn't so bad.
No, I
made
think
it
it's
sound like we
great.
were sitting down in a dentist chair. It ain't that bad. People like to know what you can rent or buy for.
They do.
Sarah Goforth, one of my favorites. Synergy One Lending. Thanks so much for coming on the show.
Thanks for having me.
All right, now we're actually going out in the field. A guy you know, Seth O'Byrne, top producer, done over $1 billion worth of real estate transactions. We visited a multi-million-dollar listing with him and our co-host Jen Morris. Let's check out what they had to say.